In a perfect world where we give money and we get something in return, or we give something and we get money in return at the same time, we wouldn't be needing these basics of accounting. But the truth is that in the real world, there is a temporal displacement between the moment that we give or receive money and the moment when we give or receive a product. So we will talk about this in a few minutes with very specific examples. But before, let me explain you what all this accounting thing is about. So it's really all about balance. There is a very simple equation, the one that you're seeing on screen right now, and this helps us organize the movements of product and cash to make sure that we don't miss anything at any point in time. So that is a very important part of the equation. It is at a point in time. So you will see later on with the examples how we need to really know when we are looking at this and where we are recording each transaction. So just a brief overview of the three terms. So assets is something that we have, something that we can almost touch, right? So this is the most common one is cash or inventory. So again, you will see later on the examples, but think of assets as something that you can truly say that you have. Then liabilities is a debt, something that you owe. It can be money, but it can also be a service. So if I promise to give my customers a service, then until I don't give that service, I have a liability because I have a responsibility to give it to them. I owe it to them. So then what's left is the equity. The equity is a little bit more difficult to understand, but think of it as ownership of the people who run the business, who own the business. So it's the marginal ownership of what they have. This means if I take all my assets and I remove all my liabilities, so I basically cancel my liabilities with the assets that I have, the remaining piece is the owner's equity. In other words, it's what the owners would own if they were to sell the business or to close the business. You will understand it better with the examples. In equity is where we record sales and expenses. So when we talk about revenue and when we talk about cost, we're really talking about equity. And that's why these are the most common numbers to talk about. Let's walk through examples as it'll be easier to understand this equation. So in the first example, I own a supermarket. So let's see what happens in different days to my balance equation. So on day one, I buy 1,000 euros worth of apples and I pay on delivery. This means that as soon as I get my apples, I give my money to the supplier of apples. So what happens? What do I have now? Now I have apples. I have inventory. I can touch my apples. I have them in my warehouse. So I have 1,000 euros of apples, of inventory. I need to balance it. What is the other missing piece of the equation? Well, I gave money. So now I have 1,000 euros less of cash. So in this case, the balance equation is just balancing on the asset side. This is the most simple of transaction, the one that you in your everyday lives most commonly see. So I get apples, I give cash. Everything stays on the asset side, on the visible part of the equation. Now on day two, I have used 500 euros worth of electricity. So what happens here? I have not paid yet for the electricity, I have just used it. But because I used it, I have a responsibility to pay for it later. So I record 500 euros of accrued expenses. The only thing that this means is I have used electricity, I will pay for it later. But because I have used it, I need to record the cost. So on the equity side, I record 500 euros of expenses. This one is a little bit harder to understand, but just think of it as being honest about your business. Your cash didn't leave your box, but if somebody wants to know how you're doing, you should let them know that you have used 500 euros of electricity. So it's just about honesty and about transparency. So we record the cost when we use it. Now on day 3, I sell 500 euros worth of apples for 700 euros. Okay, so what happens here? I'm selling apples, so I will have 500 euros less of apples in my inventory. I cannot touch those apples anymore, they are gone. So how do we balance this? Since now we sold it, we can finally record it in the cost side. So again, we go to the equity part and then we record costs. So it has cost me 500 euros to sell those apples. Notice how we're not recording cash because the cash was paid on day one. Now we're just recording the concept of cost. Again, to be transparent for anyone who wants to know how your business is doing. But we have sold it for 700 euros. So what do we have now? We record 700 euros of cash. This is coming in. I have it in my pocket. I have it in my bank account. I can touch it. I put it on the asset side. How do we balance this? Because we received the cash and we have sold the apples. We delivered the service. The customer is happy with the apples. Then we record sales on the equity part. And these sales and costs are the ones that you must have seen for sure for companies, right? And the ones that we're most familiar with. We sell for 700 and it cost me 500, so the profit is 200. Well, this simple equation has a lot of complex things behind, as you can see. And the things that we usually see on income statements or on publicly reported reports, it's usually this equity part. Then on day 4, I finally pay my electricity bill. So, the electricity that we had been using for until day 2, then I finally pay it on day 4. So what happens now? I don't have the responsibility to pay for this anymore because I finally paid it, but I'm also letting some cash out. So let's record those two sides of the equation. On the one hand, 500 euros of cash are gone. I cannot touch them anymore. They are not in my bank account anymore. But thanks to that, I owe 500 euros less. So I can finally cancel my accrued expenses account. I'm in peace with the utility company. I don't own anything anymore. So this is example number 1. Let's go to example number 2. I own a bus company now. So how do I make money? I sell 10 trips at once to customers who want to travel with me. But when they buy the ticket, what happens? I have 10 euros more of cash because the customer gave me 10 euros, so I can touch that cash. It's in my bank account. But I also have a responsibility to deliver the service. If in 2 days a customer comes and wants to travel with me, I have the responsibility to have a seat for them, fuel to travel with them, and I have a responsibility to have a company to deliver the service. Where do responsibilities go? They go in liabilities. So I call it deferred revenue. It will be sales at some point, but not yet. Right now, it's just a responsibility. So notice, this is very interesting. We received cash, but we are not recording the sales. We're being honest with anyone who wants to know anything about our business. We're telling them, we have the cash, but we won't report it as sales until we have delivered the service. So let's look at that day. On day 2, a customer actually uses one of the trips for 1 euro. Then, do I get money? No, I don't get any cash because I already got it on day 1. But what do I get? I get 1 euro less of deferred revenue. I don't have the responsibility for that particular ticket anymore. I delivered my service. So now, because I delivered my service, I have the right to record sales. And I can tell the world, I sold 1 euro of tickets. This is a little bit complicated. It takes time. So please reach out if you have any questions about this. But it's a similar concept to the one we saw earlier, only that with the supermarket, we saw it on the cost side, and now we're seeing it on the sales side. Now on day 3, let's go back to the cost. I buy 300 euros worth of fuel. So I pay for the fuel, I get the fuel. What do I have? Fuel. So I have inventory, 300 euros. What do I not have anymore? Cash. I have 300 euros less of cash. So again, this is on the simple side of things. We stay on the asset side. We're happy about it. We don't get complicated with liabilities and owner's equity. I hope this was clear, but again, reach out if you have any question.